What is your sense there in terms of the impact it's going to have both on economic growth and perhaps even more importantly on the stock market?
Well, I think the question is there a greater risk in overspending than in underspending is pretty clear. I mean, what's the risk of too big a stimulus? Maybe higher interest rates down the road, maybe a little inflation. But as Yellen pointed out, we have the tools to deal with this. The risk of underspending is further and greater unemployment, a downward spiral in the economy, possibly a recession. That is much harder to get out of. So I think her point about the risk is pretty indisputable. The point more, and of course, this is very good for the stock market. And I mean, just look at current levels, at which I think largely are anticipating a significant stimulus. That is very bullish. And ironically, the people who own stocks and are benefiting from this tend to be the ones that have not been hurt so much by the pandemic. Specific elements that are aimed at helping people hurt by the pandemic, I think, it's a very blunt instrument. It's not very closely tailored to help those particular people. And I think that is something that has troubled some of the critics of it. But nevertheless, if what you're trying to do is keep the economy thriving, it's not going to be perfect.
Yeah. And to be followed, as we heard from the Treasury Secretary, perhaps by a lot of spending on infrastructure. Now, that's something we've talked a lot about through the years. Jim, I know you think that that's something, and many agree on both sides of the aisle, that's needed. But throwing that much money after $1.9 trillion, do we run the risk of overheating this economy?
Well, I am a fan of infrastructure spending because I see that as an investment in the future of this country. I mean, when you improve the transportation infrastructure, you are helping every single person and business that takes advantage of that over time. And it will repay itself in economic growth, higher unemployment, and eventually higher stock prices. It also is another form of stimulus. I mean, I much prefer that to just handing out $1,400 willy-nilly to people, because that is not really an investment, except to the extent it helps, prop up the economy. Will it overheat? I tend to agree with Yellen. Let's see what happens. I mean, we have been in a very unusual and long period of extremely low interest rates. The borrowing costs for the U.S. government are as low as they have ever been or probably ever going to be. So if we're going to tackle this problem, now seems like a really good time to do it. And if we start to see inflation creeping back, and I'm not saying it's gone away, I mean, there are conditions in which it will return. We do have better tools, and I think better understanding of that, and the Fed can jump on that when we see evidence of that. And that, of course, would mean pushing up interest rates, and that will eventually be a threat to very high stock prices.
Shepard Smith here. Thanks for watching CNBC on YouTube.